Hi guys, welcome to another HoneyStocks.com weekend analysis, and this one is going to be going out on the 21st of June 2020. Now, before I dive into the charts, which I guess is why everybody tunes in, follows my work, a couple of things just to point out. I pointed them out last month when I did my last analysis for social media. The charts that you're about to watch are not geared towards day trading, or maybe some of you are into fundamental analysis with the market, which is completely valid. I accept all styles are valid. But if you're a day trader and you're trading low float penny stocks, for example, this is not going to help you in any way, shape, or form. You can probably switch off. But I think if you are somebody that values technical analysis and you're looking for some good logical analysis for some stocks that I feel like should be on everybody's radar for the next couple of weeks, then you'll probably get a lot of value from this. I get a lot of incredible feedback from these videos whenever I put them out, so hopefully they help you in some way. I think the other thing to maybe just kind of say before I get into the charts is, if anybody has any questions, thoughts, comments, feel free to comment below. Let me know what stocks you have on your radar. It all helps with the YouTube algorithms. This takes me around 8-9 hours to kind of put together and edit and get out to social media, so be very much appreciated. That something as simple as a like just lets me know that, wasps, that you enjoy the content, and obviously I'm aware that my time just isn't as available as it once was, so I do only put these out now around once a month, but hopefully you get some insight from it, hopefully you get some value, and let's dive into the charts and let's see what the market's telling us for the forthcoming week. So there should be a little switch up in audio quality here. I've just switched over to my microphone. Now, before I get into the charts, I'm sure most of you have watched this many times and read this many times, but please do pause the video, make sure you're comfortable with that. Like any stock market related content, there's not any investment advice. You absolutely need to do your own due diligence, etc., and do not listen to a word I say. Now, to maybe give myself a little bit of credibility, again, most of you already know this, I'm registered with the CMT Association, working my way towards my chartered status at the moment, and technical analysis is something that I'm pretty well known for. If you do get some value from this, again, please subscribe to the channel, give the video a like, let me know in the comments if there's any stocks that are on the radar for you, and yeah, let's just dive into the charts. Now, the other thing to just quickly say is, a lot of you will notice there's a change in the software. One of my clients has a severe visual impairment, so I've had to switch my charting to dark mode. So if you are watching this on your phone, you're probably going to need to put the brightness way up on your phone to really get into the charts, but I've been told that the dark mode is much better from a technical standpoint. Now, we're going to start off with the rotation graph this week. Now, what we can see over the last 5 days is we've had a huge move from biotechs. Now, biotechs are obviously starting to move. We've got gold starting to move. We've got TLT, which is a treasury bond ETF, starting to move. And we've seen a bit of a rotation out of financials, out of energy, which have performed pretty well recently. Obviously, we know the leaders in the space, the market, tech is doing what tech does. If you've not been looking at tech recently, I don't know what to say to you, but it's been a massive area of focus. Now, I'm going to give you just a couple of minutes of overall market commentary before I get into some individual names. I think I've got about 25, maybe 30 individual charts for you that should be on your radar, as I said earlier, for the forthcoming week. But the S&P 500, we've obviously had a bit of a gap down here, and it looks like we are starting to move towards potentially filling that gap. Now, what I would say is I'm bullish in the market at the moment. something that I think most of you understand is that technical analysis is obviously a tool for us to utilize. Now, I will happily change my thesis on 30 seconds notice. So by the time this goes out on Sunday the 21st, it's very possible that by Monday or Tuesday I have changed my thesis on the overall market. So I think S&P 500, for me, I would like to see this level cleared for us to start to continue higher within the S&P 500. Now, this chart got a lot of attention on social media this week because what I was highlighting here is that when we have these bearish divergence with momentum, it tends to create a bit of a problem, and we can see these declines in the market. Now, again, I'm bullish tech at the moment, guys. I'm not saying that we're going to get an imminent drop, but what I am pretty good at is identifying where you might want to start getting defensive. Again, for those of you that have followed me for a long time, you'll understand that I'm always identifying on the charts where I'm just saying, right, time to get out. And for me, triple Qs, obviously huge, huge index. And I think if we break below that level, I think that would then be a catalyst to say that the divergence is probably going to hold true. So again, I've got an eye on this level in the triple Qs. A little bit of a concern with the Dow. We've broke back below the 200-day simple moving average. Again, characteristics of uptrends are higher lows. I think we can clearly see that we're putting those in. So we're in an uptrend with the Dow Jones Industrial Average. But again, I would like to see these levels cleared. Potential descending trend line. Hopefully that would give the overall market a little bit more of momentum. Now, something else that I've picked up on over the last couple of weeks, we've had a bit of a decline here in the percentage of stocks that are trading above their 200-day simple moving average. We were up at 61% of stocks, and that has now since dropped to 39%. So that's a little bit of a headache. It's really just saying to me, look, we're bullish on the market, but let's just keep an eye on certain things that might just help us to not get crushed if we do see a market drop. And I think most of us understand what that looks like. Now, some individual areas of the market that I've got a close eye on. We're looking at gold here. Gold, I think if we can break out above this level, I think above $1,800, and we might well see a bit of a spike in the gold price. I know that there's some very smart people at Goldman Sachs, I think this week, have put a $3,000 price target on it. I don't kind of get into making up numbers. I just kind of identify the support resistance levels, and I'm just looking to take advantage of any move higher and ride the trend. I'm not in the market for little $1 or $2 moves. I want to be in it for, you know, 30, 40, $200 moves depending on the stock. That leads me into TLT. We obviously seen from the rotation graph that there's been a bit of a rotation this week, and this is the level that I've got an eye on here. I think most of us understand that the Treasury bond ETFs have just been, you know, chopping about sideways, doing a whole lot of nothing. But again, when we see these levels break, it's amazing the amount of times the momentum comes in and we get those spikes in price, and we start on a new uptrend. I'm looking to identify these long-running trends at their earliest possible source, and this is one of the tools that I like to utilize within that. Descending trend lines are a pretty good one. We're obviously with elevated volatility at the moment as well, and for those of you that maybe don't know about volatility, there's an inverse correlation with the overall market. So when we get these big huge spikes in volatility, we can generally say the stock market is probably going down, and at the same time as well, when the stock market is going up, we've got volatility falling away. But what we can see is volatility is still elevated when we look back to where it previously was back in February. So that's something to consider at the moment. We've got elevated volatility. It's obviously something that will result in, substantial intraday swings. It's not untypical that we see 300, 400 point swings in any given day. So that's something that I've very much got an eye on. Now, what you're going to notice, and I'll just quickly run through what I've got on my chart here. Now, this is a new addition. It's been requested multiple times that I add some fundamental data to my charting. So the guys over at Optima have kindly helped me out, and I've managed to build in fundamental data to the charts. I use relative strength comparison, so I'm looking for strength within the market. I use a 14 period RSI, and I use volume, and obviously within that there's a few other indicators, but primarily I'm looking at support and resistance. Now, CrowdStrike, I think if we get a sustained move above $100 here, I think that would be a place that you might want to consider. Obviously, the trend that the stock is on at the moment, I know there's many of you out there that have an issue with buying at all-time highs. I get it, but all-time highs are characteristics of uptrends, not downtrends, and this could quite easily run to $200. I'm not saying that that's what it's valued at or anything like that, but what I am saying is if we break these key levels, price tends to go on a bit of a run. Beyond Meat, I think above 167 would make a lot of sense. AMD, I think above $60 makes a lot of sense. This is actually a chart that was provided to our client and subscription base a few weeks ago, and we are all waiting for that confirmed breakout above $60. Now, the other thing to say is if there's any charts that I'm walking through that I have a position in, then I will disclose that as per my code of ethics. AYX, I think again, this is a stock that we have broken out recently. I think price is probably due a little bit of a pullback. We know with breakouts, quite oftentimes it's breakout, retest, off it goes. That's called polarity for those of you that don't know. So for me, I'd be looking for any sort of pullback, and I think you could probably buy any weakness there. Now, for disclosure, this is a stock that I have a decent position in. Obviously, we can see that we're in a really good uptrend at the moment, but again, we've now moved above a key level in the market, and the expectation is that price now starts to work its way towards the next level. So hopefully that makes that $10 move sooner rather than later, but I'm quite happy to give price a little bit of time to kind of work in my favor. I'm not always looking for immediate moves to the upside. I'm quite happy to hold for a few weeks until it gets moving, but I've already identified the danger areas on the chart where I might want to just consider saying thank you very much, and obviously moving on and reallocating elsewhere. ENPH obviously had a hit piece put out on it this week. Now, I obviously don't have any opinion either way on whether it's a valid hit piece or not. I have absolutely no idea. I know there's many of you that would have bought this dip. Hopefully that works out for you. I think this is the chart that I'm now keeping an eye on. I think if price starts to kind of break higher from this descending trend line, I think that might be a catalyst for buy position for myself. I am aware that hit pieces get put out. I know Shopify back in the day was a big one with Andrew Left, etc. Quite oftentimes it should be treated with the contempt it deserves, but from what I understand, the fund that have put out the hit piece on ENPH are a little bit more credible. I don't know for certain what will happen, but that's what the chart is currently telling me. American Airlines I talked about 4 weeks ago. I had lots of messages about it at the time, a few emails calling me an idiot. yeah, it's obviously risen 60-70% since I called out, and it's done very, very well. But again, I think this is the chart again. I think we break above that descending trend line. I mean, that was support dating back to 2008, so that was the justification for me to say that this is a level that we should be keeping an eye on. And certainly I think this is the next level. I think this descending trend line, I think if we break above that, then American Airlines might go off on another run. Amazon, I get a lot of requests on. This is how I currently see the chart. I think the first thing to say is congrats to everybody that's currently in it and obviously doing very, very well. Again, this is one that I called out on a breakout above $2,000. It's obviously moving very, very well. But what technical analysis again helps is to just identify where we might potentially get these resistance levels, because the last thing you really want to do is be in a situation here where you're holding Amazon. Yes, it's obviously a great company, etc. And yes, many of you will be holding it for retirement, etc. Totally valid. But I don't like to kind of hold stocks, and this period here was an 18-month period, 2-year period until it eventually broke out. I don't see the point in holding stocks for 2 years. I've very much got an approach where it's a case of, yes, we take advantage of these big moves, but we know when price is likely to hit resistance. We just say thank you very much, Mr. Amazon, and let's revisit you 6 months down the line, 2 years down the line, whenever that might be, and then you just kind of reallocate your risk elsewhere. So I think if you can combine fundamentals with technical knowledge, I think you're almost unstoppable in some cases. But that's how I currently view it. I think a logical upside target here around $3,000. At that point, I'd be looking for a breakout to consider holding. But I think that chart for Amazon, we can see it already has lots of merit. So the expectation is that this level here at 2,950, around that level, is an area of interest for us. That leads us on to Apple. Obviously, huge uptrend at the moment. This is one that many of our clients and subscribers are doing very, very well on at the moment. Again, we have to be bullish on Apple. I know the issue around a couple of the stores closing in the US was a catalyst for a little bit of volatility on Friday. Again, I would just urge you, if you're somebody that's watching the news all the time, I would suggest just turning the news off and just keeping an eye on what price is doing, because price is the number one indicator. It doesn't matter what I think or what the talking heads on CNBC, etc. think. Price tells us all we need to know. And for me, I think we have to continue to be bullish on Apple at this point. Boeing is reaching a bit of an inflection point here. We're hovering around the 200-day simple moving average, and I think there's likely to be a big move either up or down very, very soon on this one. Yes, it's obviously one that's done very, very well for those that have bought that huge discount. Congrats to all of you. But again, this is a key level for the stock, so I've got my eye on this chart to see whether we break to the upside or whether we break to the downside. I think that's a key area. I think Alibaba, I think above 230 makes a lot of sense. I wouldn't be looking to buy in here. I don't think there would be any kind of risk to reward proposition being offered here. So I think that's the chart. I think Alibaba. I think Facebook above 240 would make a lot of sense, just looking for a breakout and obviously looking for that continuation. CDNS, now I've actually had to switch over, to the monthly chart for CDNS. I think that the monthly chart holds a lot of weight. Again, if we go back to what I was talking about with Amazon, just to be aware of these levels, I think this 423 extension level of the drop back in 2007 holds a bit of weight there. So I think for any new entries, I'd be looking for this level to clear.
So I think, you know, if you set a price alert, I think around $100, I think CDNS might be one of those that goes on another run. Again, Match Group was one that I posted to social media last week. Again, got lots of attention. Um, yeah, we're looking like we're wanting to break out. Now, again, the logical expectation is that if it breaks out above this level, it just slowly starts making its way to the next level. For me, I'd be looking for $100 to clear here. Now, obviously, there's a lot that has to happen for it to get to 140. I know it has to navigate things like earnings, etc., etc. But you know, stocks trend, markets trend. We get the valuations dictated to us by price. So I think if price starts to spike higher, I think Match Group I think would be a solid play. DocuSign, again, we're in a solid uptrend here. Price is currently trading at $161. Again, this is one that's done very well for many of our clients and subscribers over the last few months. Long may it continue. I think you've got to be bullish DocuSign at the moment. Disney might be interesting soon. We had a little bit of an excursion above the 200-day simple moving average before it falling away again, but I think that's a shakeout, and I think if we break back up above the 200 period simple moving average, I think we'll see a bit of a rally to the upside. Again, I don't want to kind of get into the whole stock market versus the economy. I think most of us understand there's a little bit of a disconnect there. I'm not here to debate that. I'm just here to kind of walk through what price is doing and what price is telling us, because I think what we're probably finding out is that a lot of the stocks have been discounted appropriately for the circumstances that we're in, and yeah, I think above the 200 period moving average. Now, this is my own custom China tech index. Again, this has had a lot of attention over the last couple of weeks because one, we've broken out from the Honey Stocks China Tech Index. These are the holdings. So when we have an index like this breaking out, all we're really looking to do is just identify the strength within the holdings. And again, this is an area that I think should be an area of focus. It's amazing how when you observe things like the news where we have all this bearish sentiment towards China, all the headline risk, etc., but what's actually going on, and that's dictated to us by the price of the stocks. So we're getting all this negative news, but all the big money in the background are buying up these stocks. So that's one of the reasons why I don't like to pay attention to the news, because we can see what's happening. So we are getting all this negative news, but for some reason the smart money is loading up on these stocks, and I think that should be an area of focus. I think if you were to have a look at these stocks, I think GDS is one of them. Again, this is one that posted this breakout here a couple of weeks ago, and it's obviously doing very well. Home Depot, I think we have to get above this pretty strong level of resistance. We're only a few dollars away, so I think if we get a breakout here, I think that'll be a catalyst for Home Depot. iRobot Corp has been massive recently since it broke out above its 200 period simple moving average. Yeah, solid uptrend, lots and lots of upside potential still in this. I think given the run that it's had, I think, you know, it would make a lot of sense that it maybe chops about sideways for a little period, but I think again the uptrend is there for all to see. Now, a huge congrats to everybody that has been loading up on Square. I know there's many of you out there, especially in the Stock Twits feeds, that are obviously keeping an eye on this $100 level. We know in the past that this has been a solid level of resistance, and the $100 level is a big barrier for most stocks. So for those of you out there, if you can get above that $100, I think Square might go on an even bigger run than what it's already been on, and I think that would be a catalyst for new money to come in. And if we get that spike, you'll probably get a lot of the shorts starting to cover, etc. So yeah, I'd be keeping a very, very close eye on that $100 level. LVGO, again, the decline from its IPO. Again, we've broke out recently. We've had 4 weeks of consolidation sideways, and the expectation is, again, it starts to work its way towards 95. MasterCard, descending trend line, looking for a breakout here. Obviously, the payment processing companies, the credit card companies, Visa, MasterCard, Square, etc., have all been on rocket ships recently. So again, we're just identifying these levels that we want to pay attention to, where we might well get further momentum, further strength coming in. Moderna, again, 50 period simple moving average acting as a bit of support here. Since then, price has just been steadily rising. Obviously, I think there's obviously a lot of headline risk with things like Moderna, simply obviously because of the fact that you've got the coronavirus, etc., and vaccinations. And so if you're going to play the biotech space, you obviously need to be very, very selective in the companies that you're going in on, because there is a lot of risk attached to the biotechs. All it takes is for, you know, a negative finding to come out, and the thing can just absolutely tank, as we've seen in the past here. So I think you can still continue to be bullish Moderna at the moment, but I would assume that anybody out there that's in Moderna is very, very comfortable with the risk that's attached to it. Microsoft, I think this level here above $200 makes a lot of sense. It wouldn't surprise me in the slightest to see a little bit of chop here before we sort of rally higher. But the question I'm kind of asking myself is, well, what happens to tech, and if Microsoft is breaking out to new all-time highs? That's not going to be a bearish development for tech. So I would highly suggest that keeping an eye on the chart for Microsoft would be a good thing to do. Netflix, I think, makes a lot of sense. I think if we get a breakout here above 460, I think that's a good level. I think Nike have earnings this week, so I've obviously got this one on watch. This is a stock that I've done very, very well on in the past. And I think if we can get a move above 105 on the back of earnings, then that's going to be a bullish development. Now, I think we all understand the retail space is obviously taking a massive hit at the moment. So earnings will be something that I'll keep an eye on just to see what the sentiment is. But I think above 105, again, would I buy any weakness? I think if the weakness was to maybe drop down to a solid level of support, I may consider it. But again, I'm predominantly looking for a move above 105 there. Nvidia, I think, again, this is a logical level to keep a very, very close eye on. I think as per my own process, this would be a level where I'd be saying thank you very much, Mr. Nvidia. But again, I'm going to shock a lot of you here. I think if it breaks out above 385, and if we get continuation, I think there's every chance that starts to move towards $600, which is obviously a massive upside objective. So we'll see what happens there. NVTA, I think, very, very close to breaking out. Now, this is a chart that has been sent out to our clients and subscribers. What we're hoping here is that we get a solid move above the 200 moving average like we've seen in the past. So I think that's a level to pay close attention to. Pan American Silver, we've got a triangle pattern here. So I think what we're looking for here is an up breakout. It's quite often a continuation pattern of the underlying trend. We know the underlying trend is up. Triangle consolidation, breakout upside. That's essentially what we're betting on there. Peloton, I think above $50. I think coronavirus play. Again, we're looking for it to move towards 68. PayPal, solid uptrend. We can't fight price, we can't fight what the market's telling us here. So again, I think you just have to be bullish PayPal. I think you can buy any weakness in PayPal provided the underlying trend remains intact. Huge momentum play here potentially with Roku. If you watched last month's analysis, you'll have realized that I said something along the lines of I think if we drop to $100, I think you could look to potentially buy that weakness. It's not a stock that I would personally play, but that's exactly what's happened here. We pulled back to $100 and lo and behold, off it went. So congrats to anybody that bought it. But I think if you're out there, I think this triangle pattern again is one to pay attention to. Again, the stock's too volatile for me. I'm not a big fan of volatile stocks. But you know, I'm asked my opinions on Roku all the time, so there it is. SailPoint Technologies, this will probably be a new one to many of you, but again, it looks like we're trying to break out here. I think there's a good 39-40% upside. Now Starbucks is interesting to me. Again, this is one that I've done very well on in the past. I'd very much like to get back in. I love a nice Colombian blend as much as the next man, but I think there's a lot that has to happen here. I think a move above the 200 period moving average is a level that I want to pay quite a lot of attention to, and I think that this level of potential resistance has a lot of merit as well. We're only $5 or $6 away, so I'm going to be adding this one to my closely followed watch list on a day-to-day basis, and I'd very much like to get back into Starbucks again myself. Shopify, huge move recently. Again, congrats to everyone. It does look like it's breaking out again. What I would say though is prices, obviously you have to understand where prices come from in its recent move. I would expect to see some consolidation here. I think that would be very, very healthy for the underlying trend. Again, we're not fighting price. I think if we get a little bit of a pullback here, I think any weakness can get bought. You know, Shopify, the thing's just on a rocket ship at the moment. So again, congrats to everybody. Teladoc, I think above 200. I think if we can get continuation here early next week, I think that's a level to pay attention to. We've had a breakout recently in Trade Desk. I don't see this trend stopping. I think fundamentally, from what I understand from a lot of my fundamental guys, they're very, very high on the company. They like the company. Again, I can't really speak to the fundamental side of things, but you know, absolutely the trend is there. I think Trade Desk. Slack Technologies, again, we're looking at these key levels here. I think if you're looking to buy a new position, I think above 34.50 would make a lot of sense. And we're going to just run out with Zscaler. Again, continuation pattern. This is a trade alert that was sent out to our members above $70. We're obviously way up at 108 now. The trend is doing very, very well, and long may the trend continue on Zscaler. So hopefully you've all got some insight into the market at the moment. Hopefully you've got some really good ideas there, and if you've got something from it, please do give it a like. Like I said, I do this for nothing. It takes me 8-9 hours to prepare it and obviously get it all done and recorded, etc., edited. I'd very much appreciate it. But if you are somebody out there that maybe does struggle a little bit, I think most of you already understand that I've had to step back from a lot of my social media stuff over the last few months. The reason for that is I've got quite a large group of clients and annual subscribers now, and what I do is I reassess my workload on a monthly basis. I take a look back to see how much of my time is taken up on on a day-to-day basis, because the most important thing for me is to be able to have time to enjoy life. I don't have any grand plans to be the biggest trading community in the world. I couldn't think of anything worse. But with that said, obviously, we're looking to maybe take on a few more members this week. So if you like this analysis, if the style resonates with you, maybe you'd like to pick up technical analysis, we do provide quite a lot within our offering. You get 1 year full access to all our trading ideas, and I'll walk you through that in a second. You'll have 1 year access to our weekend charting analysis. You've just watched an extended version. You've got 1 year access to our trading community. We provide charting requests. Again, I'll show you what that looks like in a second. But I think one of the reasons why it's super popular is we're giving away access to our technical analysis program, and we have done since the start of the year. And obviously we used to charge a lot of money for that. It's incredible feedback, but that's what our trade alerts look like. We're not using any magical hindsight indicators. We tend to give at least 12 to 24 hours notice for any trade alerts, sometimes a few days notice. We're not day traders, but very, very clear. Obviously Barrett Gold, the thing risen to $30, did very, very well on it. Pan American Silver, again, trade alert here, above $23, had a huge move. Zscaler, again, 71.50. You just seen there at the end, we're up at $110 at the moment. Like I said before, one of the reasons why I've had to step back from social media is because of obviously my chart requests that I deal with on a day-to-day basis. I'm a super busy guy, and this is an example of that. I think Twilio, this was provided to one of our members on a breakout above $100. Again, I'm very open and transparent about my work. I timestamp or date stamp all my charts. On the 16th of April, Twilio's up at $200 now. But the unique thing about what I do at honeystocks.com is, and I wish everybody would do this, is I log every single trade idea that I've ever put out to my clients and subscribers, and I've done that for the last 3 years. So if you want to go and have a look and see the types of stocks that I'm recommending, the price that I've recommended them at, what that stock has then gone on to do, you know, you can go and have a look to see that we're a good fit for you. Everything is logged. I've got a code of ethics with the CMT Association, and absolutely there's nothing that's been left off there. It's all logged for complete transparency, so feel free to go and check that out. We've got an incredible group of traders all over the world. We're in 25 plus countries now. We've got Mike, made it to 6 figures on his account. Ganesh, $40,000 profit. Jay, 30% profit on Peloton in 10 days. And Jamie, 150% profit. The list really goes on, but I think something that most of my clients and subscribers appreciate more than anything was the ability to get defensive ahead of time. Now, obviously, we had to deal with a very difficult market crash, and I know there'll be many of you watching this that got burned really, really badly. Now, if you're new to my work, a few months ago, I put out to social media my client analysis to help everybody get defensive ahead of time. So I'm going to put a link in the description or a link as a follow-on video for that analysis, so you can get a better feel for what it is that I do, just in case you're maybe on the fence about what it is that we do at honeystocks.com. But I just put out a simple question to my subscribers: with the drop we've seen, how many of you got defensive ahead of time? And 76% of our subscription base got defensive ahead of crash, which is just incredible. Again, you won't see me shouting from the rooftops about I called a crash or anything, because I didn't. It's just about understanding how to get defensive and when to get defensive. If you go back to the start of this presentation where I was talking about the triple Q, for example, it's just about understanding the little intricacies of what would constitute or warrant a defensive course of action, and that's something that I'm incredibly proud of. So, if you're looking to maybe fit trading around a career or a business, or get away from day trading, maybe you want to just kind of pick up technical analysis to aid your own fundamental knowledge. I find that that's a good combination for a lot of our subscribers and clients. But I don't know what your personal deal is, but if you're looking to maybe learn a new way, or maybe you just want to obviously be part of our charting research at honeystocks.com, feel free to obviously register your details in the link below. But if you've stuck around to the bitter end here, thank you very, very much from the bottom of my heart for watching. Maybe we will welcome you very, very soon. Thank you for watching.